10 biggest trading mistakes that will keep you unprofitable. If you are trading and you're still not profitable yet, this video is going to change your life. Because most traders don't fail because they don't know how to trade, or because the market is against them, or simply because they're not lucky. No, they fail because they repeat committing the same mistakes over and over and over again. So today I'm gonna share 10 mistakes that I've made, that my students have made, and mistakes that almost every unprofitable trader makes. Today I'm breaking down the 10 biggest trading mistakes that will absolutely keep you unprofitable if you don't fix them. And stay until the end of this video, because mistake number 10, it's the silent killer of your trading plan that nobody's talking about. So let's get into this video. Mistake number 1, not having a real trading plan. Mistake number 1 is trading without a plan, without a strategy. And no, I'm gonna buy here and I'm gonna sell there. That's not a plan. That is gambling. A real trading plan answers 4 simple questions. What market am I trading? When should I enter the trade? When should I exit the trade? And how much am I willing to risk? If you cannot explain your strategy in 1 simple minute, you are trading without a strategy and you are just guessing. You're gambling because you don't have a plan. You're just trading based on emotions, and it should not be like that. Trading with your emotions end up with bad results, and most of the times end up blowing many accounts. And I don't want that to be you. That's why professional and profitable day traders trade with rules, not with their feelings. Mistake number 2, risking too much per trade. This one alone has blown more accounts than any mistake ever. Risking too much could be the killer of why you're still not profitable. If losing 1 trade can emotionally break you, you're risking too much. If 2 losses in a row make you want to win it back, you're risking too much. Most profitable day traders risk 1% per trade. Why? Because trading is a game of profitabilities. Losses are guaranteed in trading. The point is to keep your account and your funds. That's why you have to have a risk management system. You don't grow accounts by just trying to hit home runs. You grow them by staying consistent in the game for the long term. Mistake number 3, over trading. More trades do not equal more money. In fact, it usually means less. Over trading comes from being bored, from being impatient, or needing to feel productive. But the market does not pay you for being productive or for activity in the market. It pays you for discipline and consistent trading setups. The best traders often take fewer trades than beginners do. They wait, they pass, they say no to a couple of setups, because if the setup is not there, there is no way why you should take it. If you feel like you have to trade every single day, that's also a red flag. Mistake number 4, moving your stop loss a lot. This mistake, it's deadly. You enter a trade, you enter a position, and then you set up your stop loss. Price move against you, and instead of accepting the loss, you move your stop loss a little bit. Then you move it again, and then it keeps going down, and you move it just 1 more time, just hoping it's going to get back the entry. Now, what was first a small loss turns out to be a disaster. And stop moving your stop loss. The stop loss are there to protect you from being wrong. The moment you move them because you hope price comes back the entry, you're no longer trading logically, you're trading with your emotions. And fear could be expensive in trading. Mistake number 5, revenge trading. This one is emotional, and it's one of the deadliest too. You take a loss, it feels unfair, so you feel angry about it. You jump back into the market without having a setup just to get your money back. That's revenge trading. And the market does not care about your feelings. The market cares about probability and consistent execution. Revenge trading leads to bigger losses, even worse decisions, and having a total loss of your account. And then you ask yourself, what is the fix? Honestly, after you lose a trade, just a step away from the market, close your computer and go on about your day. A profitable day trader knows when not to trade too. Mistake number 6, not having a trading journal. If you don't journal your trades, you are trading blindly. A trading journal shows you what works, what doesn't work, what are your best setups, and what are your worst setups. You have to gain data, because without data, you cannot improve realistically. You cannot improve your trading plan. You're just gambling, guessing. Most traders do not want to journal their trades simply because it ends up exposing them. They're trading with their emotions, and growth starts with being honest with yourself. So you have to start taking accountability for having a trading journal. If you're serious about profitability, journaling should be non-negotiable. Mistake number 7, strategy hopping. This mistake keeps traders stuck forever. You try one strategy, it loses a couple of times, and then you quit it. You see another great strategy on YouTube, and then you switch, and then another, and then your next influencer shows you the best strategy out there. No strategy works 100% of the time. Losses are part of trading. They're part of the process, and profitable traders master one simple system. Losing traders and unprofitable day traders, they just be collecting strategies like Pokemon cards. It should not be like that. You should have a consistent game plan that comes from commitment and high probability setups. Mistake number 8, ignoring market conditions. Not all strategies work in all markets. A breakout strategy could fail in a choppy market condition. A fair value gap strategy might fail in a strong push trending market condition. If you don't understand what kind of market you're trading in, you're gonna blame this strategy instead of adapting to it. Ask yourself, is the market trending upwards or is it trending downwards? Is it ranging? Is it confluencing? Does it have high volatility? Does it have liquidity grabs? What is it? You have to have context within your market structure. Always. Mistake number 9, focusing on the money instead of the points. This is powerful. When you focus on the money, you are trading with your emotions because you're becoming greedy. You end up closing too soon, and then you hesitate on taking your entries. But when you focus on the execution and the points, profitability becomes a byproduct of your analysis. The goal should not be to make money. Your goal should be to have the right trading setup and executing it to the T. Do that consistently and the money will follow. I guarantee you that. And mistake number 10 is not having patience and having realistic expectations about trading. This is the biggest one. Most traders quit right before they would have succeeded. They expect fast money, instant results, daily profits. But trading is a skill set. Skill sets take time, months, years. If you treat it like a lottery ticket or like a gambling addiction, you're going to lose, and probably a lot. But if you treat it like a real business with discipline, patience, structure, consistency, now you give yourself a real chance, because there is no shortcut in learning a new skill set, and that's actually a good name for you. So if you fix even 2 or 3 of these mistakes, I guarantee your trading will improve dramatically. Go back, rewatch this video, be honest with yourself, and if this video helped you somehow, hit the like button, subscribe for more real trading education, And remember, I'm gonna be hosting a free training masterclass explaining step by step how any beginner trader with zero experience can make anywhere from $2,000 to $5,000 per month consistently. If you are interested in that free training, it will be completely for free, Sunday at 4 p.m. Central Time. I'll see you in there. Register down below is the link. I'll see you guys in there. Have a great day.